Hey folks, Chris here with Greenbar Trading, also known as Ghost of GBT on Reddit. Coming back for another weekly charting and technical analysis video, which is now becoming known as the weekly AMD long analysis video. So we will be looking at AMD long as usual. Also going to look at AVXL, Nvidia, BERY, Lulu, Siri. We'll look at a few of these. So I've got them organized by upvotes. If you don't know who I am, I do a weekly video on Reddit where we basically organize the ideas via upvotes, and then I'll go through the top 10 and look at the charts and give you my thoughts. And then we post it on YouTube, and if anyone has a stock that they did not get to, or they missed the thread, or whatever the case might be, you can post it in the comments on the YouTube video and I will attempt to answer it there via text. So like I said, we're starting with AMD. This one always, for whatever reason, everyone on Reddit's obsessed with AMD. It's not a bad stock. I actually really like it. It trades well. It's been really, really strong this year. So I do like the stock. This week we have a lot of upvotes on it, 12 points. So we'll start there and see where it goes. So we actually looked at this last week, and I had said last week when people wanted to long this that it was too high and it needed to consolidate sideways or sort of set up a little bit before we bought it. And so now it's done that. So this is actually in good shape this week. If we look at like a 30-minute or a 60-minute chart, you can see that it started to sort of form into a coil, which now means that it's much lower risk here than last week when we were looking at it over here, right? So it's sort of worked its profit takers out, and now it's consolidating underneath $9. And so I would say that this week is probably the week to trade it if you're going to. It could still move sideways because it was a pretty big run from 6 to 9. So, it was a pretty big run there. It could still move sideways for a few more days before it really tries to break over 9. But my guess is that within the next week or so, we're going to see this thing try to push through 9 and sort of break out of this little consolidation that it's created. You'll most likely at least see it push up through 9 and hit these previous highs here in 922 or so. And then if we look at a weekly, let's see what sort of the next resistance is on the weekly. So it looks like, let's get rid of those lines. Remove all lines. Okay, so it looks like we had a 922 high there, and then over here we have 917 and actually 922 on March 7th, 2011. They have 939, 945, 958. So my guess is probably over that like 925 spot, it's going to shoot up to 950, and then over 950 probably go to 10. So you'll see that these stocks will move in like blocks of sort of round numbers. So here's the resistance that we're at right now. This little tiny resistance here at 920s. And then if we get over that, we'll be heading towards the 950s. And then once that breaks, most likely these highs, which looks like 1020s, but you're going to run into some resistance, as you can see here. And that's just the high. So you're going to run into some resistance right at $10 just because it's a round number. So, those are your potential stopping points along the way. But, overall, I like the stock. It's been very, very strong. I think that this week is probably going to be a good week for it. So I'll definitely be watching it. And yeah, looks good. So there you go. There's AMD for this week. What I would watch for actually is a break of this coil right here. So if we look at like a 15-minute or a 5-minute chart, you can see it's just getting tighter and tighter and tighter. And so it's starting to get a little wild in the mornings. At one point, this morning push is going to hold, and it'll push up towards $9 and then probably move sideways around $9 for half an hour or something like that, and then it should break out. But it looks like 880s, maybe like a 887 or 889 or 890 entry would be good, with a stop loss down here in the mid 860s. So just basically keep it tight when it breaks out of this upper trend line here. Grab it somewhere in this area and then set your stop loss underneath the lower trend line. That would be how I would play it. It's going to be the lowest risk type of play. and it's going to give you the best risk to reward, because that way, you risk 20 cents on it. Say you buy it at $8.90 and you risk down to $8.65. You risk 25 cents, and if it pops from $8.90 even just up to those highs there, you're already at 1-to-1, better than 1-to-1. Even if it stalls at 920s, and then if you get to 950s, which would be the next major resistance, then you're at 2-to-1, and then $10 to $10.20 would put you at 3-to-1 or 4-to-1 in terms of reward to risk. So that's how I'd play AMD. Looks good. I think it's getting ready. Might need just a couple more days, but I think this week at some point it should be good. Next up, AVXL. Anavex. So this is a trading vehicle only. This company is sort of one of those companies that perpetually dilutes the stock. They release good news and then they dilute it, and then they release good news and then they do a secondary offering. They release good news, they do a secondary offering. So that's why you see all of these big spikes, all the big gaps, they always close red or they get faded back. Or it goes on a big run like this and then they do a secondary offering and just tank the stock. So, it's a cash burner basically. So, it's definitely not an investment in my opinion. For me, it would just be a trading vehicle. It does look pretty good if it can come over $4. So it had a big gap up, faded away, and then next day came back, closed green, and now it's sort of testing that high from the gap up day. And so I think, it's sort of a grind upwards, so I would just probably join this trend somewhere along the way. But it looks pretty good. This is a nice trading stock too. It has a big range, so I could definitely see this break over $4 and push up towards 425 and get stopped by the 200-day moving average. That would be sort of my potential target for it. So whatever you can do in order to get it so that it's 25 or 30 cents of reward is enough, right? So you want to risk less than 10 cents per share on it. So overall, looks pretty good. I'll be watching for next week. Next up, Nvidia. So we've looked at Nvidia a couple times. They had earnings recently. And yes, so it looks like it's kind of grinding. It hasn't really pulled back from its earnings. So I'm not sure how I feel about that. It definitely is consolidating near 95 here. So if it does push, it's probably going to break out through like $95. The only concern that I have is that it hasn't really pulled back from that earnings day, and it's a little bit extended on the daily chart. See how it hasn't really had any dip, and so it's really far away from this major trend line that it was riding for a while. So it needs to sort of come back into that trend. It's really tough to buy a stock unless you're just going to hold it for a couple of days, which is what I would do. It's really tough to buy a stock when it's this extended, especially if it's in like a real tight range, because then everybody has their stop losses set like right under here. And so the second that it snaps under like 92.50, it's just going to tank. So it's a little risky up here. However, it's low. It's risky in terms of the probability, but it's low risk in terms of the actual amount that you'll be risking on it. So I do like it. I would definitely be watching it for a pop over 95. Maybe a red to green type of move. So it opens up at say $94 and then goes green through wherever it closed here, 94.16, goes green through 94.16, and then takes out 94.50, 95, and so on. It looks like the high is 95.24.99. So it needs to get over $95, but overall looks good. It's a tight pattern, it's a clean pattern, so I'll be watching it. Just be aware that if it breaks out and fails, it can tank really quickly. So keep your stop loss pretty tight on it. Number 4, Berry. So this is a plastics group, Berry Plastics Group. I don't really like this. First of all, it doesn't have a ton of range. Secondly, you're asking about buying Berry long, and right now it's right at the top of its channel. See how it's just been channeling like this, kind of going sideways for the last 3 or 4 months? So where is the next logical place that it should go? Probably back down to the bottom of this channel. So until it like really breaks out with some power, see, it doesn't really have any volume right now on this breakout. So to me, this just looks like a failed breakout. It might be ready to pull back and then break out in a few days, but this breakout was not powerful at all, right? It didn't have any excess volume. It kind of faded and just turned into a big wick on top of the candle. So there's not really anything exciting about that breakout. So personally, I would not long this. I feel like this is just going to come back down into this channel again. However, in a few, I don't know, maybe like a week or 2 weeks, it might be interesting, because sometimes what will happen is these things, they try to break out and they fail, and then they'll go back and try to break out again and fail, and on the third shot they finally go. So it might be worth watching, since it's tested this level 3 or 4 times now. It seems like it tried to break out and just failed the first shot. So, you know, watch for it to pull back. Maybe you could even buy it in the middle of this range or towards the bottom of it. If you could pick it up at like $44 in anticipation that it eventually goes back through, say, 47. It might be a good potential play there as well. So there's Berry. Let's take a look at Lulu. And someone here mentioned that they have earnings on December 7th, so that's a good point. Lulu. December 7th after market close. So just keep that in mind. You don't want to be trading this on, you know, December 7th. Because, well, maybe at least not holding it overnight on December 7th, right? You can trade up until that point, but I never hold through earnings. It's just a rule that I have, because you never know which way these things are going to go. By the way, while we're looking at this, very good shape in terms of being a trading stock. It's 121 million shares float, so not super low float like some of the other ones that we've looked at, but it'll move a little bit. You know, it doesn't have a huge range, but it's got enough range that you can get some money out of it. So we were looking at Lulu. Whoops. So Lulu, nice side note here, 13.6% short interest. So that's good. That's going to definitely make it more explosive to the long side. And I like this pattern that's developing. Let's look at it in more detail. Yes, I really like this actually. This is very clean. You have a very obvious breakout spot here, right at, it looks like $59, right at the round number. If we go across, you'll see 58.88, 59. I'm looking at the highs, 58.85, 58.51, 58.98, and then over here 59.09, 59, and then 59.38. And so what's going to happen on this thing is it's going to push hard once it breaks and holds over 59. So that's what I'll be watching for. Like this pattern a lot. I like the stock. It's high short interest, low float. It looks like it's attempting to bottom out. It's put in some pretty good support over the last couple of months. So I definitely do like this. I just want to see it get some volume, and I want to see it break over this 59 spot. That's the key right there. That $59 level is the key. So once it busts over 59, it should go. And a reasonable target for it would probably be, you can actually see this 59 level goes back all the way to here. So old support becomes new resistance. So you can see that it used to be support there at 59. And so the next probably logical place for it to go, if it breaks above that, it actually goes back even further. You can see it all the way back to here. That 59 level has been a key level for actually a really long time. You can see it even all the way back here in like 2013. It was still oscillating around that 59 level. Here it was acting as support, and then it acted as resistance, and then it was acting as support again. Now it's acting as resistance. So that 59 level is definitely a key spot. So keep that in mind. It seems like it's right in the middle of that range, is sort of where the key is. So anyway, I'd be watching this to go over 59, and then a reasonable target for it would probably be, I guess, maybe just like this most recent breakdown here. So it kind of broke underneath this level, which would take it up to about 64.25, give or take. So, you've got $5 or $6 of upside there. So, yeah, I really like this. I'll definitely be watching that one for next week. Okay, Sirius. Sirius is a tough one because it's very, very thick. This guy needs to turn off his car alarm. Yeah, so Sirius is kind of a tough one. It's lots of float. So if we look at the float, 1.62 billion shares in the float. That means that in order to get the same type of move as a Lulu or an AVXL or something along those lines, where these things, right, the stock went from $8 to $4 in one day, or over here where we had this big gap up, and then even from the gap it ran from $4 to a high of 488 that day. This is because the stock has very, very few shares in the float. There's not very much supply. So when you have a stock like Sirius, which has 1.62 billion shares in the float, it takes literally billions and billions of shares to get this stock moving. So I won't be trading this one just because, frankly, it doesn't move. I mean, look at the 5-minute chart. It literally just sits in a 1 cent range for hours and hours and hours. The reason that this thing's so liquid is because it's nothing but high-frequency traders and algorithms that are trading it. The only people that are making money on this are high-frequency traders. And they're not even people. It's computers, right? That they're trading around retail traders' orders and just capturing half a cent here and 3/4 cent there and just trading within that 1 cent spread. So I won't touch this thing. It's just not the type of stock that I trade. It's not going to move. Unless you're going to hold it for 2 weeks, which I'm not going to. So I would not trade this one. Next up, ON Long. I think we actually looked at this one recently. I think this is a semiconductor company. Yeah. So this one's sort of like AMD was last week when I said that it was a bit too extended over here. You see the similarities here where AMD went from 650 or so, 630 up to 850 or 875. And then we look at ON, we see almost the exact same thing, just different price levels. It's up 4 or 5 days in a row. It needs to sort of move sideways and settle a little bit like AMD has done. So look for that exact same type of pattern on ON and for it to kind of settle and set up underneath this. Looks like 1250, maybe 1275 area. That's what I'll be watching for on this. I do like the stock. It's definitely been in a nice run. It seems like it wants to go for all-time highs, but it needs to move sideways and set up a little bit first. So there's that one. MNK. Earnings on November 29th. So that's probably going to be a no-go for me. Let's see if that's accurate. November 29th before market open. Earnings Whispers says November 29th confirmed. That's what the little check mark means. So yeah, this one's going to have earnings on Tuesday, so I will not be trading this. Let's look at the pattern though. I mean, I might trade it on earnings day, like once they release their earnings, but I won't trade it before then. I mean, I don't really see any pattern on this, and whatever pattern is there is going to be busted because it's going to gap either up or down based on the earnings. So what I would do is if you want to trade MNK, which personally I wouldn't anyway, just because, I don't know, it doesn't really have that much potential in my opinion. I mean, I guess it's only 100 million shares float, so it's not that bad. But anyway, they've got their earnings coming up. I would personally leave it alone. If you want to trade it, wait until November 29th before market open is when they release their earnings. So wait until after they release their earnings and then trade into that extra volume that comes on November 29th with their earnings release. So, you know, let them release their earnings, let it pick a trend that day. And if it's trending up, you know, then you can grab it. The other thing that you can do is wait a day or two after they release their earnings. So like Nvidia here, they released their earnings, the stock gapped up, pushed all the way to 90 bucks or so, and then it settled for 2 days, and then it kind of went on a run from there. So you can catch that little secondary run off of earnings. A lot of times that's going to be the lower risk option. So you could watch for something like that on MNK as well. But personally, I probably won't touch this. It's just not really a stock that I trade. Western Digital. Let's take a look at WDC. So we're at 1, 2, 3, 4, 5, 6, 7, 8, 9. We got one more after this. Okay, Western Digital. I kind of like this. So it is. We had a breakdown over here underneath 60 bucks, and now it's come back around $60 and it's sort of holding above it. So I kind of like this. High here of 61.98, high of 61.75. Over here we have a high of 61.97, 62.34, and it looks like that closed in a wick. So that's sort of a failed $62 breakout, and then it came back, retested 60, and now looks like it's gonna attempt a break of 62 again. So it seems like that $62 is going to be the key for it. So I'd watch for it to come over 62 with a target probably up here at these highs, which would be 64.79 or so. And then if it gets above that, whatever this breakdown is right here, just channel that over 66 bucks. So right from 62 to 64.50 or 64.75, and then if it gets over that, 64.75 up to 66. So it looks like you've got $4 of upside potential with a little bit of a stall around 65 bucks. And so that I would use that as my target. What I would do in terms of risk is just make sure that you can get it for less than, say, $1 of risk, because you've only got, you know, $3 or $4 of upside before you run into resistance. But you've actually only got $2 or $3 of upside before you run into that 65-ish resistance. So you want to make sure that you're risking less than $1 per share on it. So watch the intraday charts and make sure that you can get away with, you know, buying the thing at 62 and putting your stop loss at 61.50 or 61.75 or something like that. That's going to be your best bet. So like the pattern, I'm not sure about the float on this one. I think it's a little bit high, if I remember right. Yeah, so Western Digital is a little bit high. It's 284 million shares float. I personally tend to trade lower float stocks. I prefer to trade stuff like 100 million shares float or less, just because they move more. But, you know, Western Digital is it's a strong company. It's a good mover. It just tends to be a little bit slower and a little bit more grindy. So just keep that in mind when you're trading it. It's probably not going to be the type of stock that just spikes and goes crazy right away. So there's Western Digital. And then the last one that I'm going to get to today looks like is EPD long, which I do not know what that is. Let's take a look. This is interesting. Yeah, so this is actually one of my favorite kinds of patterns. Just going to quickly look at what the type of company is and what their float and short interest and all that stuff is. So very thick stock, billion shares in the float. So you're going to have to probably trade some size on this because it's not going to move a ton. Average volume is really good, 4.66 million shares, so that's good. You can trade a lot of size on it if you have the buying power. The only downside is that it's 26 bucks a share. So, you know, if you want to buy 10,000 shares, you got to shell out 250 grand, which is obviously not something everyone has. But if you got it and you're not afraid to use it, then go for it. So a couple, 1.5 billion shares float there. No short interest really. It's an oil and gas company. How's USO doing? USO is the United States Oil Fund. So I always look at that as a guide. USO looks kind of fugly right now. Just kind of going sideways like it has been for pretty much the whole year. So there's no real exciting pattern in USO. If anything, I would call this a rejection of the 200-day moving average, and it's sort of failing. But then again, it's done that countless times this year, so it doesn't really seem to be paying attention to the 200-day moving average anyway. So that probably is not real significant. It's just in the middle of nowhere. So anyway, that said, I do like the pattern on EPD. It's going to run into resistance here at the 200-day moving average around 26.45 or 26.50. So here's your pattern. You want to probably see this thing come over 25.75 or 25.80. There's your pattern. Your target is just going to be basically the 200-day moving average. So, you know, there's your upside potential. And then if we look at a 60-minute chart or a 30-minute chart, we'll be able to see a little bit easier where you could put your stop loss. So there's your breakout, basically. You got over 25.80 would probably be the breakout. And then your stop is going to be underneath that. So it looks like 25.50, which is right here, would be a decent spot for your stop loss. So 25.85 entry, give or take. And 25.50 stop loss is going to be 35 cents of risk for potentially, if it goes to 26.40 minus 25.85, gives you 55 cents of upside for 35 cents of risk. So not great reward to risk. It's about 1.5 to 1. If it goes above 26.50, then that's fine, but it's probably not going to because we have the 200-day moving average right there. USO is weak, and you've got this big resistance that is coming into right here. So the reward to risk on it's a little bit weak. You could adjust that by potentially getting a slightly lower entry and anticipating the 25.80 breakout. So you could try to get it at like 25.70 or 25.65, or buy it on one of these dips down towards the 25.60s. That would be much better reward to risk, but it's also lower probability because then you don't know that it's going to break out. If you buy it above 25.80, then you already know that it's, you know, the breakout is already sort of confirmed at that point. So I'm torn on this one. I like the pattern. I probably won't trade it personally just because it's 1.5 billion shares float. There's not the greatest reward to risk. It doesn't seem to have that much range. Plus it's expensive, which means I got to have $250,000 just to trade, you know, a good amount of it. And I don't really like to shell out that kind of money for a trade unless it's really going to pay me a lot. So I would leave EPD alone personally, but there definitely is a pattern there. It's low risk enough if you're patient with it. So it looks all right. I'll give it a solid meh. So there you go. There is the top 10. For any of the ones that I didn't get to, if you really, really like them, then drop them into the YouTube comments section and I'll try to answer them there. Let's look at this guy here, Captain Good Vibes. Just because he says he's a very amateur investor looking for some free help. We'll give him some free help. He wants to talk about McDonald's long. So McDonald's, so McDonald's ran right into the 200-day moving average here. The 200-day moving average, for anyone who doesn't know what this is basically the average price over the last 200 days. And so that tends to be, since it's a longer term moving average, it tends to be really difficult to get over that. Certain stocks will follow the moving averages better than other ones. This one doesn't really seem to pay attention to the moving average, but if anything, this is going to be, probably a tricky spot to get over. So I wouldn't long this right now just because it's come from 111 up to 121 and it's running right into the 200-day moving average. The other reason that I would not trade this is the float. As somebody else mentioned, 828 million shares in the float. It's only 1.4% short interest. If you guys want to go onto my YouTube channel, there's another video called 5 things to look for on every trade. So you can dig in here. This is just a free video that I made. It's about an hour long that talks about the 5 things that I look for on every single trade. And those 5 things are the float, the short float, in other words, the short interest, how many people are holding the stock short, the relative volume, the chart pattern, and then the news. And so I went into detail on like what those specifically what I look for on those. So if you're new, go and give that video a watch. It's a good good way to get started. And that's another reason that I wouldn't trade McDonald's, is just because, like this guy said here, it's got 830 million float it's 830 million shares in the float. So there's too much supply, right? If you think about it in terms of supply and demand, look at something like AVXL. And we'll look at it on like one of these big days, like this day here, where September 22nd traded 11.3 million shares that day, and it gapped from a close of 261 to a close of 328, which was 328 divided by 261. So it's a 25.67% move, right? So it's a big move. The reason that the stock moves so much is because if we look at the float, it's only 33 million shares in the float. So it traded 11.3 million shares out of 33 million shares in the float, divided by 33.3. It traded about a third of the float, which means if McDonald's was to have the same type of 25% move, 830 times 30.339 or whatever it was, this stock would need to trade, McDonald's would need to trade 281 million shares in a single day in order to have that same type of relationship between supply and demand as AVXL had. And as we can see, McDonald's trades on average 3 million, 4 million. Big day here was 10 million. If we look back at like the biggest days ever on this stock, they were like this one here, 25.2 million shares. So there's just so much supply. It's going to take an act of God basically to create that amount of volume in order to make McDonald's make a 25% move. So that's why I don't trade stocks that have a lot of float, because there's just so much supply. It takes so many people trading it to make it move a lot. When you have a low float stock, it doesn't take very much volume to make it make big giant moves. So little tidbit of information about why float is so important. But that's why I wouldn't trade McDonald's. So anyway, if you guys didn't get your stock answered, if you didn't get your idea taken care of in this video, then just post it in the comments section on the YouTube video, and I will hopefully be able to get to them at some point during the week. And as always, like, comment, subscribe, all that fun stuff. I usually throw a link to my free newsletter and my free blog and all of that into the description. So if you want to sign up for that info and I have like free trading ideas that I send out twice a week. You're more than welcome to sign up for those as well. And I will put all that info in the description of the video. So thanks again, and I will talk to y'all soon. Peace.